So we have the man over here, and Jarek's with us. He's actually has his own independent broker, and he's someone that's navigating through these times right now. And I remember having a conversation with him about how all the refis were happening. He's super busy. It's like the best time ever. And then boom, pandemic hits, and it's just like, hold on, what's happening now? And so how are things going on your side? And from everything from, top to bottom, how are you navigating through these times, Jarek?
All right. Well, we are definitely very busy, and yeah, I kind of wanted to go. I'll kind of go through what I was going to present here as far as March in a nutshell, and like really why all these things are happening on the back end, because we hear things are going away, but I don't think everyone really understands why. So to the best of my ability, I will let you know what is going on with each segment of financing here. And so basically on March 3rd, correct, it was party time. Rates were at 2.75. I'd say I first heard about social distancing right around that time, right? And we were still elbow bumping and fist bumping and all those things. Then from there, on March 13th, rates actually went to 4%. So they pretty much went up 1.25 in about 10 days, which is highly unusual. And basically it's never happened before. And we'd see more volatility of ups and downs recurring. And then March 15th was the Sunday the Feds went to zero, so to speak, right? And so that did cause a lot of pressure for loan originators, because every single client and lead in the world thought that mortgage rates were zero, and that is just not the case. And we'll go into why as I move on. So after that, last week, March 20th was Friday, I believe. Anyway, that day we heard rumors about the non-qualitative mortgage market kind of shrinking, credit was shrinking, but it basically just disappeared. And by like the Monday of this week, any non-QM, and so just to clarify, non-QM loans, those are your bank statement loans, a lot of restaurants, a lot of self-employed small businesses on bank statement loans, right? Your foreign national loans, the loans we kind of talked about. Norman and I did a little thing in January, so yeah. All that is gone. That company is not funding loans that we did that with. So it was just out of the blue, we are done. And then also coming out that week and into this week, one thing is with appraisals, Fannie Mae and Freddie Mac are looking at doing exterior only, big move towards exterior only appraisals as much as possible, as well as property inspection waivers. So that's all coming out, but they're also doing a lot of verification of income. Like right now, my processor is scrambling on funding loans, and we have these conditions popping up. For example, one lady is a dog walker. And so we need to prove that she's been getting paid in the last few weeks, which just came up today as we're working on getting docs out and funding this loan. So certain types of income, like if you're a restaurant, they're going to want to make sure you're cashing checks or seeing some sort of alternative verification of employment at funding. Then we are also seeing, though, good news, conforming rates are coming back down because there has been so much money pumped in by the feds to mortgage-backed securities. So conforming loans will be a solid source of buying and selling homes, like through these coming question mark months. I would say if you have a conforming loan, it can close for all intents and purposes here. But we also did see now government lending is kind of drawing back, the government like FHA and VA loans. I haven't seen this yet. I've heard rates are going up. They're still good today. But basically why all this is happening, if the 10-year treasuries at this all-time low, et cetera, is pretty simple. Basically, here's what drives mortgage servicing. So as far as the services go, they need to make sure that there's value with these mortgages. And so there's two things that servicers, I should say, don't like, and these are who you're writing your check to, et cetera. They don't like default. And we had just 3.28 million jobless claims, I believe, last week, or the last report we had, which is unprecedented, greater than any quarter. And so the likelihood of default is imminent. I mean, it's coming, right? There's going to be some defaulted loans. The next thing is prepayment speeds. They want to be in these loans for as long as possible. Like when you're writing that check to XYZ bank, they don't want you refinancing and getting into and selling the loan, right? Because they service those, the mortgage-backed securities, they make their money that way. And so they don't want to see prepayment. And we have a very high risk right now, we've seen rates go all over the place, but the projection is we're going to see some pretty good interest rates in the coming months. We don't know when, but it's more likely to happen than not happen. Let's just say that. So when we see lower rates, we're going to have early payoffs, and that's a huge issue. If you're funding a loan right now and this guy's going to refinance to 2.5%, in July, this is bad business. And so that's why a lot of credit's backing off. It's not because there's a lack of money in the market like 10 years ago, 12 years ago. It's because of these two things, early payoffs and a strong likelihood of default due to unemployment. So this is what happened with non-qualitative mortgages. And like I mentioned earlier, if you're a bank, you're a restaurant, et cetera, or not a bank, I'm sorry, a restaurant, self-employed, convenience store, et cetera, small businesses, these are private money. These aren't backed by the government. This is private money, and they just pulled back. They stopped honoring the locks. I know of a bank that had about 5 million in their books, and they're trying to sell it for 80 cents on the dollar. So they're basically going to lose $1 million on this. But that's what's happening, where it just came to a complete stop. And then as far as jumbo loans, the same thing happened, where I have a loan I'm closing right now. On March 3rd, it was locked at 3.375. And I went and priced a jumbo loan this week, 5.5% and 5 points. And it'd be like 60 grand to close the loan based on the loan amount. So it's just like the market's gone. And then to go into what's happening with government loans. So VA and FHA, we have the government's lending box is shrinking. Again, a lot of the servicers just don't want any more loans. It's my understanding they're not doing adjustable rate mortgages. And the VA has capped loans to $1 million. And then with government loans, there's big forbearance that we're hearing, right? Where we're going to be skipping some mortgage payments, et cetera. And so these are Ginnie Mae backed bonds, and they're basically looking at up to 25 billion being laid out to hold for bondholders set aside for forbearance and mixed payments. So if you have a 25 billion in forbearance, you're not going to want to originate another FHA or VA loan right now. So right now the market is still healthy, but that is something that can go away at any minute. And it can just go away like the non-QM did. And we do have lenders saying April 1st, we're going to have non-QM again. It's going to be a little different. We'll see what happens. And then as far as private money, which is like hard money, I did talk to an investor this week as well, because I've got so many calls because non-QM's gone. A lot of people were in escrow and falling out. So I'm seeing what else is out there. And on private money, and this is very regional towards where you live. I mean, this is a California specific investor. But they want a 60% loan to value now. So they've capped their loan to values, where normally you could go like 30% down, sometimes 25. They want really strong deals at a 60% loan to value. And they're getting requests for forbearance as well, like even from a restaurant I know here in town, asking for forbearance on making the payments because they haven't been open in 3 weeks. So that's kind of what happened this month and why. So I hope that kind of clears up any questions people may have had. I'd say, where do we go from here? Like what Kevin was saying, I definitely think, first of all, I did steal that safe and sane call, because we are definitely educating clients. I think realtors need to be out there educating clients. Everyone needs to be out there, at least checking in and making sure we're all okay. I think it's the right thing to do. I'd say as far as buying and selling, you want to make sure we're still working, and this is not to be a shameless plug or anything, but because it could change tomorrow again, but we do have lenders that are on like 24 hours approvals on purchases and 24-hour closings. One thing I've seen is certain lenders are capping pricing. So let's just say if you have a 4-unit building right now, there's loan level pricing adjustments, where if you're at just say 3.5, and no points, quote unquote, you're not paying a point for your loan. If you have a cash 4-unit, you'd be at like 4.5. And so some lenders are capping pricing because there's pricing adjustments, but they think a 4.5, 4-unit building is going to be refinanced in a few months. So they'll cap the pricing at like below 4 on these loans. They won't go above 4 on the conforming rate sheet. And so they're capping pricing just because they don't want that business right now. Others, you cannot lock until you're clear for docs. And then others are just business as usual. So it's pretty important. It's kind of an odd market, I'd say. stick with a very strong lender, and you don't need to shop around. Do that before you get accepted. But once you're in escrow, it is, balls to the wall, close that transaction. Especially if you're very motivated, of course, which hopefully you are if you're doing that right now. So yeah, that's kind of what I have there. But I'd say conforming is going to stay strong. Government, there's rumors it's probably coming, but I haven't seen it today.
Got it. Interesting. Wow. Well, that's great information. Thank you so much for telling us all what's going on in the market. So tell us a little bit of have you gone through the process of escrow yet? Like, how are you navigating and not meeting your clients, not signing documents, working from home? Have you gone through that process yet?
I'm pretty virtual. I've been virtual for a long time now. And my team is virtual. So honestly, our biggest issue is capacity right now.
Got it. Okay. Awesome. Yeah, I'm on the same page. We're virtual too here at Liftoff. So it's been, not too much of a transition as it is. I can only imagine for the real estate community out there working more, face to face.
Right. I will say one thing, everything is DocuSign until you sign the final loan docs. They are looking into e-signing. I understand some states are still on board. I don't know why California isn't of all states, but we are looking into that, as I'm being told.
Yeah. So we got a question from someone here about as far as the mortgage payments and as far as the skip payments, how does that process work? Do they have to be paid back? What does that look like?
So that is the forbearance process. Typically, it means they do need to be paid back. How you would handle that and advise your clients is to call the servicer themselves. I can't really do anything as a broker, but whoever they're making their payments to, they should call and see what it's like. I've heard the big banks are just saying yes. I haven't heard much else about that, but I'm sure, the government's assisting with that. So it should be an issue. It shouldn't be an issue if it is a true need. I would say don't call it a skip a payment, because I've seen people try to do this and ask me about it if you don't need to, which sounds silly, but I've seen it this week. So yeah, there you go.
I'll be good faith here, okay?
Yeah.
Not trying to take advantage of this whole system.
Yeah, please don't.
Even though the government just signed a $2 trillion bailout, but let's just be conscious of what we're doing. Well, fantastic. Looking for any of the questions. So if anyone has any questions, go ahead and say them now. Anything that you want to leave for everyone as far as summing up your segment?
Stay safe, stay healthy, be kind.